Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Huabao International Holdings Limited annual report. Huabao International Holdings Limited is a diversified investment holding company that operates in various sectors. The company's primary business involves the research and development, production, distribution, and sale of flavors, fragrances, food ingredients, tobacco and aroma raw materials, and condiments. The company offers a range of products including paper-making products, reconstituted tobacco leaves, new material products for the tobacco industry, natural extracts, tobacco flavors and fragrances, cigarette paper and auxiliary products, synthetic perfumes and food flavors and fragrances. These products cater to various industries such as tobacco, food, and fragrance. In addition to its product offerings, Huabao International Holdings Limited also provides administrative and management consultancy services. This indicates that the company has a strong presence in the market and is capable of offering comprehensive solutions to its clients. Overall, Huabao International Holdings Limited's business operations are extensive and diverse, reflecting its position as a leading player in the industry. Huabao International Holdings Limited market capitalization of $13 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Huabao International Holdings Limited holds a significant advantage in their industry. Huabao International Holdings Limited trades at a higher price-to-book ratio of 0.96 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 9% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for this company can be attributed to several key factors. Acquisitions have played a significant role in boosting revenue, with notable contributions from Jiangsu, Jiafu Food, and Hunan Jiapinjiawe. The addition of new customers, such as Broad Far Group in Shanghai Miu, has also increased revenue. Furthermore, investments in research and development, particularly in the tobacco raw materials segment, are expected to drive future growth. Additionally, the company's expansion into new markets, including Indonesia and Botswana, is a key driver of revenue growth. On the other hand, the primary drivers of revenue decline can be attributed to decreased consumer confidence and downgrading consumption patterns, leading to a decline in revenue. The recognition of goodwill impairment for Jiahao Foodstuff CGU has also resulted in a decrease in revenue. Furthermore, a decrease in contract liabilities related to unrealized sales incentives has contributed to the decline in revenue. The company's revenue growth rate has fluctuated over the years, with a significant decrease in 2023 and an increase in 2025. The acquisition of Jiangsu Jiafu Food contributed approximately Rm 104,739,000 to consolidated revenue, while Hunan Jiapinjiawe acquisition contributed approximately Rm 42,409,000 to consolidated revenue. These statistics provide a snapshot of the company's revenue growth and decline drivers over the past few years. The net income of the company experienced a decline between 2024 and 2025, with a loss increasing from RMB 385,509 to RMB 388,803. This decrease was largely due to a goodwill impairment loss of approximately RMB 488,392,000. Additionally, increased raw material costs and decreased revenue and gross profit margin of Jiahao Foodstuff CGU contributed to the decline in net income. The company's profit margins also underwent significant changes during this period. The gross profit margin decreased from 42.7% in 2024 to 40.8% in 2025, while the EBITDA margin improved slightly from -2.1% to -0.2%. However, the operating profit margin increased from -11.9% to -10.4%, indicating some improvement in the company's operational efficiency. The reasons behind these changes are multifaceted. Increased raw material costs and decreased revenue and gross profit margin of Huabao Foodstuff CGU were major contributors to the decline in net income. On the other hand, increased product added value led to an improvement in gross profit margin. The fluctuations in EBITDA and operating profit margins suggest that the company is still grappling with operational inefficiencies. Overall, the changes in net income and profit margins reflect the challenges faced by the company in managing its costs and revenue streams. While there are some signs of improvement, further analysis is needed to understand the underlying causes of these trends and identify areas for future growth and development. The company's financial performance is a testament to its ability to generate positive operating cash flow. According to the provided data, in 2025, the net cash generated from operating activities was RMB 825,947, indicating a significant increase from the previous year. A closer look at the numbers reveals that while the net cash generated from operating activities decreased slightly in 2024 compared to 2023, it still remained positive. In fact, the company's ability to generate RMB 679,702 in operating cash flow in 2024 demonstrates its resilience and efficiency in managing its operations. The data also shows a notable increase in total revenue for both years, with RMB 971,742 generated in 2025 compared to RMB 883,706 in 2024. This growth in revenue is likely a key factor contributing to the company's positive operating cash flow. Overall, these figures suggest that the company is successfully generating sufficient cash from its operations to support its business activities and investments. The company's debt level has undergone significant changes over the past year. According to the extracted summaries, the debt level decreased from RMB 194 million in 2024 to RMB 146,900,000 in 2025, a reduction of RMB 47,100,000. This decrease is consistent across multiple pages, indicating a deliberate effort by the company to reduce its debt burden. However, the interest expenses have shown mixed results. While some pages indicate an increase in interest expenses, others show a decrease. For instance, page 237 reports an 18% increase in interest expenses from RMB 62,445,000 in 2024 to RMB 72,867,000 in 2025. On the other hand, page 311 shows a total finance cost decrease of RMB 26,522 from 2024 to 2025. Despite these fluctuations, it is clear that the company's debt level has decreased significantly over the past year. Whether this reduction will have a positive impact on the company's financial health remains to be seen, but it is a step in the right direction. The company's performance varied across different regions and segments. On the positive side, Indonesia, Southeast Asia, Americas, Europe, and international business segments performed well. The F&F and food ingredients segment, tobacco raw materials segment, aroma raw materials segment, condiment segment, and overseas markets also showed strong performance. In addition, the company's innovative tobacco products, health sector, daily use chemicals sector, and regional partnerships were successful. Digital transformation, R&D, production and sales team and customers also contributed to the company's growth. The tobacco raw materials business unit and business segments are expected to perform well under a new strategic plan. On the other hand, domestic tobacco customers and the tobacco raw materials segment concerning domestic tobacco customers performed poorly. The F&F and food ingredients business, condiment, and others also struggled. However, it is worth noting that some pages did not provide information on segment or region performance, which may have affected the overall assessment. Management statements about the company's outlook and strategy are focused on maintaining financial stability and adaptability. They plan to meet capital expenditure needs through internal resources and bank financing, ensuring that they have sufficient funds for future investments. The company will also prioritize corporate governance excellence by preparing for the 2026 board performance evaluation. In terms of driving business performance, management aims to respond to changing market conditions, which suggests a flexible approach to adapting to external factors. However, there is no clear indication of a specific strategy or outlook on the company's overall performance, growth, or market position. The company will continue to collect contractual cash flows and sell financial assets to achieve its business model objectives. Management has also clarified their accounting practices by stating that they will classify certain financial assets at fair value through profit or loss, FVPL, including debt instruments and equity instruments held for trading. This suggests a commitment to transparency and accuracy in financial reporting. Overall, management's statements emphasize the importance of financial stability, adaptability, and corporate governance excellence. The company has made significant moves in its business strategy through acquisitions and divestitures. In terms of acquisitions, the company has purchased Guangdong Jiahao Food Co., Limited. This acquisition is noted on page 187 of the extracted summaries. In addition to this major acquisition, the company has also acquired a foreign operation, although specific details about this transaction are not provided in the summaries. The exact nature and scope of this acquisition remain unclear due to the lack of information. It's worth noting that there have been no divestitures mentioned in the extracted summaries, indicating that the company has focused on expanding its operations through acquisitions rather than selling off existing assets. The company's financial activities have been well documented in its reports. One notable aspect is the payment of dividends to its shareholders. The company has indeed paid dividends on multiple occasions, as confirmed by various pages in its reports, including page 13, page 44, and page 54. In addition to paying dividends, the company has also engaged in share buybacks. This means that it has purchased a portion of its own shares from the market, reducing the number of outstanding shares and potentially benefiting shareholders. The evidence for this is found on pages 13, 44, and 125 of the reports. Concerns about inventory buildup and supply chain disruption. There are potential concerns regarding inventory buildup and supply chain disruption in the industry. An imbalance of supply and demand, alongside imported inflation caused by geopolitical factors, may lead to inventory accumulation, page 121. The data also shows that inventory levels have increased slightly from 2024 to 2025, with a significant increase in provision for impairment of obsolete inventories, page 284. Furthermore, two companies, Guangdong Golden Leaf Technology Development Co., Limited, and Jiangxi Huabao Xinhui Technology Co., Limited, have large inventories of reconstituted tobacco leaves and tobacco raw materials, respectively, pages 332-334. Additionally, Huabao International Indonesia has a significant inventory of tobacco raw material in Indonesia. While some pages mention potential concerns about supply chain management or inventory levels, they do not necessarily indicate actual problems. However, the accumulation of large inventories and increased provision for impairment suggest that there may be underlying issues with inventory buildup and supply chain disruption. That concludes the financial summary for Huabao International Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.